What is a mortgage prepayment penalty for home buyers? Have you ever wondered what happens if you decide to pay off your mortgage early? Let's break down the concept of a mortgage prepayment penalty and how it affects home buyers. A mortgage prepayment penalty is a fee that some lenders impose if you pay off all or part of your mortgage loan before the agreed term ends. This penalty is meant to discourage borrowers from paying off their loans early, whether by selling the home, refinancing, or making a large payment toward the principal balance. Lenders typically earn interest over the life of a loan, which can last for 15 to 30 years. When you pay off your loan early, they lose out on that expected interest income. The prepayment penalty compensates for that lost revenue. There are two main types of prepayment penalties. The first is a soft prepayment penalty. This applies if you refinance or pay off a large portion of your mortgage early, but it does not apply if you sell your home. So, you can sell without incurring a penalty, but refinancing might trigger a fee. The second type is a hard prepayment penalty. This applies to any early payoff, including selling your home, refinancing, or making a large principal payment. Most of the time, these penalties are only in effect during the early years of the mortgage, often within the first 3 to 5 years. Not every mortgage has these penalties. They are more common in certain types of loans, such as non-conforming or non-qualified mortgages. If you make small extra payments toward your principal, you usually won't trigger a penalty. Many lenders allow you to pay extra principal up to a certain percentage, often around 20% of the loan balance per year, without incurring a fee. However, paying off a significant portion or the entire loan early can activate the penalty fee. For home buyers and sellers, understanding whether a mortgage includes a prepayment penalty is essential. It can impact financial decisions like refinancing or selling the property. Before committing to a loan, buyers should carefully review the loan agreement to see if a prepayment penalty applies and under what conditions. In the context of fixed-rate versus adjustable-rate mortgages, prepayment penalties can influence flexibility. Fixed-rate loans sometimes include prepayment penalties to protect lenders from losing interest income if the borrower refinances to a lower rate. Adjustable-rate mortgages may or may not have these penalties, depending on the lender and loan terms. Overall, a mortgage prepayment penalty is an important cost consideration for home buyers and sellers. Understanding these penalties helps avoid unexpected fees and supports better financial planning.